Welcome to the new cyber frontier, bringing you the latest news and initiatives that focus on the development of cybersecurity economics. You don't have to be a computer or cybersecurity expert to get plugged in. Your host brings it straightforward, asks the tough questions, and brings the cyber world to a level of understanding for everyone. You can find us on the web at www.newcyberfrontier.com. Now join our host as he introduces the topic for today's new cyber frontier.
Welcome to today's episode of New Cyber Frontier. On today, Peter Daneyko, the co-founder of KoreChain and the CRO of CoreConnect. And Peter and I are going to talk about capital raises today. So if you've been in a startup or you're always curious about what all those market terms mean for Regulation A, Series B, Reg-CF, we're going to talk about that today and how to get involved and get your startup up to that point. And Peter has been involved with over 200 capital raises for many different companies and can help us kind of navigate and understand the terminology here. And again, you guys have been following me through my journey quite often. And as we're kind of working through this in our own status of Blockframe, this is something that's near and dear to me, and bringing Peter on to talk about some of the things that I've learned that I think everybody will benefit from. Welcome today, Peter. Thanks for joining.
Hey, pleasure to be here, Chris, and looking forward to the next 30 minutes.
Yeah. So give us a background. How did you get, people don't start out being where they're at in life. What was your journey like to get you to the point where you are?
Well, probably first and foremost, I was an entrepreneur. I was an employee. I've had my own private companies, and I was involved in the technology space as far as information management goes. It was a really big part of what I was involved with over the years. Lo and behold, companies need to raise capital, and traditional raising of capital I got for my own companies. I knew it was hard. It's hard for companies to raise capital. Traditional finance was, hey, do I go to a VC? Do I go to my friends and family? And the landscape has changed along with technology that's starting to facilitate these changes. So two things kind of occurred, and I'll give you a bit of a backdrop because we're going to talk about alternative capital raise options. Okay, so a lot of people might have heard approximately 15 years ago there was something that came out. And it was called the Jobs Act. And the Jobs Act was really regulations that wanted to democratize access to capital. How do private companies and private individuals invest in smaller companies or larger companies for that matter? Historically, you or I, well, maybe you could, depends what your net worth is at given points of time, certainly at points in time, couldn't invest in any private company randomly, okay? You had to be either what was called let's take a look at private companies that go public. And for me to invest in, say, a Tesla, for example, I really couldn't even participate. I couldn't be a small investor and said, wow, pre-IPO, I'd like to put $1,000 into Tesla. If I was able to do that, it may have been worth a few $100,000, but I couldn't participate. So this whole concept of the democratization of capital was really all about to say, how do we, and hence the Jobs Act. If companies have access to capital, they can create more jobs. So the Jobs Act was founded, and it was pushed through the Obama administration, and it was a gentleman by the name of David Wield, who was the father of the Jobs Act. I name dropped because David's a good colleague and an advisor to us as well. So now you got this idea to say, I want to raise capital, but how do we do it? How do we do it online? So let's fast forward. Technology didn't exist. Understanding that there's these new regulations that allow me to do what's called general solicitation to the public. So I can say, whoa, wait a sec. You mean I can go and advertise and market to the general public and raise money for my company? So early on, the nascent aspect, people might have thought, isn't that kind of like Kickstarter? I kind of remember I could go to Kickstarter, I could start a product that I haven't made yet, but I wasn't selling securities. I wasn't raising capital for my company. In that environment, I was simply saying, invest in something, but you're buying a product. I'm not taking equity or debt in a company. So what the Jobs Act facilitated was three primary exemptions. Regulation CF was regulation crowdfunding. And today it allows individuals or companies to raise up to $5 million to the general public at large. Now, there's lots of rules and guidelines around this, and there's a lot of intermediaries that are required that we're going to talk about. This is where technology comes in.
All right.
So
Well,
imagine if you
let's
go
take
ahead.
a break. Let's take a break real quick here from our sponsors. We'll be right back. We're going to continue that conversation.
Blockframe Technology offers next-generation blockchain managed trust and security. Unique non-fungible tokens are used to secure software bills of materials to provide data quality and security for every transaction in your supply chain. Deploy advanced peer-to-peer product security, scale zero trust capability to millions of IoT devices, allow vendor tracking and accountability, and rapidly reset from compromise. Unchangeable, time-sequenced blockchain data provides next-generation security using machine learning trust algorithms and audit analytics. Start securing your supply chain today by contacting Blockframe at www.blockframetech.com.
Welcome back to New Cyber Frontier. On today, talking about raising capital for startups and access to the capital markets with Peter Daneyko. Peter, before we get back into, we were hot on the topic of how things have progressed, what's available. Being in the middle of this, the first thing, and we were introduced as part of this outreach that I'm doing to try to connect me as a startup, been in technology for years, but I haven't been in the whole industry for financial capital and raising. And it's like a whole different crowd getting plugged, getting connected. So, the first thing I wanted to ask you is making that connection. How would someone that's been, great idea, great execution, startup, now they need to start entering into this whole new world. How do they make that transition?
So education, it's all about education, Chris. It's about understanding what's new and what really exists. So early on, we said, hey, the traditional way to raise capital, friends and family up to a point, go to the bank, go to venture capitalists, and that was kind of where it was. So if you understand the regulations, that's the first starting point. And it's having communication with whether it's securities lawyers, whether it's companies like ourselves that actually help educate. So think of it this way. I'll go through three different buckets of opportunities. The first question we ask is, how much money do you want to raise? Is it debt or is it equity? And are you familiar with the regulation? Regulation CF allows you to raise up to $5 million, do it online, and do general solicitation and marketing. No different than if I opened up an e-commerce site. Now, there's a lot more to it from a compliance perspective than a traditional e-commerce site. But from an investor perspective and from an issuer perspective raising capital, you're going to create a web page or a property. That page is going to have various intermediaries that are going to manage and control that. Things like a broker dealer. So there's going to be different participants here. And so what you really need to say is, hey, I can raise up to $5 million. I got a great idea, but nobody knows about it. So I'm going to tell my idea to the world, and I'm going to share that idea, and I'm going to hone in on individuals that my offering can resonate. Remember, these people couldn't invest in private companies before this way. So by understanding what the rules and the regulations from a compliance perspective are is one thing. The other side of it is to say, what are all the participants that I need to make this happen? And where does the technology come into play? So technology takes away the friction and allows compliance. So imagine, if you will, I want to raise $5 million, and I can give you examples of companies that have raised, in excess of $100 million through multiple different general solicitation to the public. Doesn't mean it's easy, but it means it's an alternative vehicle to do it. And people are be surprised that private companies today doing this have not 100, 200, 300, few thousand, in excess of 50,000 investors in private companies, a single private company. Now, you can well imagine trying to manage all of this. Well, this is all managed efficiently, primarily due to technology, leveraging things like blockchain, bringing together all the trusted intermediaries so it's efficient, quick, and fast, and economical for both the issuer raising capital, as well as the participants, because they're going to perform a task. What do the numbers look like for them when I talk about things like a broker dealer? So the first thing to your original question was, it's about education. To say, hey, I can raise $5 million. How do I do it? I can tell my story. It's about telling a story. And the
So what
hundreds of
else? So telling your story, but now if you haven't been out there, I've been kind of out telling my story for a while,
yeah.
it's getting the platform together to be able to do it, to be able to engage people, have them click and do e-commerce to buy your offering. But now say you haven't been out publicly, you haven't put your message out, what are the connections and the pieces to help make that happen?
Well, obviously, probably the heaviest lift that you're going to have on that piece of the puzzle is once you go outside your immediate audience and relationship, it's marketing. You do have to expose your offering and yourself, and you need a level of trust, obviously. Hey, I'm going to land on, what's called an offering page, and that page is going to say, hey, we've just created the new greatest light bulb, and this light bulb is magical, and it does some really, really interesting things. And this opportunity, I need to talk to people that might be interested in that opportunity. So a lot of times it can be sector driven. It might be, I'm interested in a pre-revenue startup. Another company might be interested in, say, hey, I'm interested in that real estate opportunity. And we're seeing a lot of real estate opportunities where companies, hey, I'm a seasoned real estate guy, and now I can let the public participate. So their story would be different. Maybe they're going to pay dividends, and that may be more of a shorter term, and potentially perception-wise lower risk than say, is this going to be the next big thing in a particular category? So there's two different audiences, but by casting a wider net and getting from a marketing perspective, you at least have the ability to say, I'm going after all the guys that happen to be that are interesting in tech, interesting in blockchain. And if I can tell my story, they have the ability to invest in my company. So it's really making that awareness. So there's a number of firms out there from a marketing perspective, and that's what they focus on. They say, hey, just like e-commerce, they say we're going to focus on sectors. There's marketing acquisition firms that say, we're going to help get your message out there, depending on what stage you're at as a company. You're brand new, you need that level of trust. And that's your biggest lift. Once that's done and people come to eventually hit an offering page, from that perspective, it needs to be easy, quick, fast, and seamless. And then you get into things like, well, how do I pay for this? How do I get approved for this? And that's where companies like KoreConnect come into play, that we facilitate that. Okay, so from a tech, I can say I want to invest $1,000 in company B, and I can use my credit card. Well, I better have a credit card provider that understands securities and understand that it's not e-commerce and what that means. I better be connected to a bank that's going to facilitate the transaction to protect the investors. So all of these things are about education. So one regulation says I can raise up to 5 million. Talk to the audience. Chris, your point about when I'm talking to the audience, how do I get it? I have to market it. There needs to be a grassroots marketing campaign. If you're not ready to do that, I suggest to companies, don't just jump in blindly. Just say, okay, I've got to do some marketing. I've got a great story. The nice thing about the exemptions, you have 12 months under these regulations. So I can raise up to 5 million every 12 months under one exemption called CF. I can raise up to 75 million under another exemption, which is a more sophisticated offering, qualified with the SEC, but I can raise up to $75 million every 12 months. Another reg, and that's for what we'll call accredited and non-accredited investor. A non-accredited investor is
explain
anybody.
that one.
Yeah.
Go into more detail on that one, because that was a confusing area that really kind of takes an understanding.
Yeah. So think about it this way. Traditionally, most of the ways to raise capital, one, I couldn't do general solicitation prior to these new exemptions, and you're exempt. These are reporting exemptions. So traditionally, I had to be an accredited investor, and accredited investor is somebody that makes over $200,000 a year and has a net worth of over $1 million. Okay, so that would exclude it excludes the majority of the population. Okay.
Do they have to be registered with somebody to prove that, or is it just like, I meet that?
So an accredited investor has to provide some documentation, or what's referred to as an attestation, that says, I've got a letter from my lawyer, a letter from my accountant, or a financial statement that says I'm worth this. Okay. So there's that paperwork, okay, to prove that I'm accredited. And it says, you're going to take the risk. you make all this money, put your big boy pants on or your big girl pants on and say, okay, understand what you're getting into. So from that perspective, the perception is you make enough to risk what you're going to risk. Okay. So that's an accredited investor.
Well, hold on a minute.
Majority...
Let's hear from our sponsors. Just take a real quick break. We want to be back in a minute. Hold on.
Blockframe Technology offers next-generation blockchain managed trust and security. Unique non-fungible tokens are used to secure software bills of materials to provide data quality and security for every transaction in your supply chain. Deploy advanced peer-to-peer product security, scale zero trust capability to millions of IoT devices, allow vendor tracking and accountability, and rapidly reset from compromise. Unchangeable, time-sequenced blockchain data provides next-generation security using machine learning trust algorithms and audit analytics. Start securing your supply chain today by contacting Blockframe at www.blockframetech.com.
Welcome back to New Cyber Frontier. On today, this fascinating world of equity and investing and raising capital with Peter Daneyko. Peter, before the break, we got talking about accredited investors, and then you were transitioning. So kind of roll into that thought of where this goes from here.
Yeah, so we touched on the fact that an accredited investor has to do some level of proving that they're accredited, okay, hence an attestation to say that this is what I'm worth. Now, what about that individual that says, I'd like to put $1,000 in. Typically, that accredited investment, they're larger amounts. Smaller amounts might be $25,000 for an accredited investor to invest in a private company, or hundreds of thousands or millions. And then you get up the investment food chain, so to speak, where you're going to have institutions and all kinds of different things there. We're not going to talk on that today. We're focused a little bit on, okay, I want to raise money for my company. I can market to my company. And we have this other audience called the non-accredited investor. So the non-accredited investor is anybody. I have a 22-year-old daughter who happens to watch a lot of or hear a lot of presentations when she's not in school. And she goes, hey, Dad, I'd invest in that company. And I'd say, why would you invest? And she goes, well, I like what they're saying, or they're doing something good. It might be an environmental project or something. So that's an audience, a different mindset. But remember, maybe it's the next big thing, or maybe it's something that really that individual investor, like my daughter, can resonate with and said, hey, they're going to, get rid of plastics or do this. So there's a financial upside, but they're also doing good. She now has the ability to invest as a non-accredited investor. She's a university student. To protect her, there's ceilings and caps. So they'll do they'll ask, how much do you make? But it's not income verification. If I tell you I make $50,000, under the different regulations and the technology platform will say, hey, you can invest X amount of dollars. It might be your cap is $2,500 you can invest. But it makes it easy and takes out the friction of the issuer for smaller investors to say, I have to go through this exercise and prove that you make $2,500 or $25,000 or you're worth $1 million. That's it's self-accreditation. So that's the beautiful part of it, is it lets individual own the ability to participate, but it also wants to mitigate their risk. Okay. Now, third-party intermediaries that are involved are broker dealers in this world. Okay. Or what's called a funding platform. But let's just look at it from a broker-dealer perspective. The broker's dealer is going to be pushing buttons behind the scenes, say, I'm going to approve all these investors. Okay. It's easy for them to approve the investor because they're saying, you told me you made $50,000. Under this exemption, you can invest up to X thousands dollars. You paid with your credit card. I need to do things. So that's what they call investor suitability. I won't get too deep dive on that, but so if you really think about it, hey, I can make an investment. I say what my income is. And solely from that, the issuer in a regulated environment, you're leveraging a broker dealer, simply says, I'm just marketing. So they can focus on the business, focus on the marketing efforts, or have a third-party marketing firm do this. So the closeout on that, the big difference is the non-accredited investor, one, can participate. Two, it's self-accreditation. I tell you what I make. I just type in, I make X amount of money, dollars per year, and what my income is. Now, they're going to click on a bunch of disclosure documents and things that they've read on the offering page, which said, hey, this is a risk. This is a risk in the company. I read the fact that I have the opportunity to change my mind 48 hours before a close. So there's a whole very, very structured process, but it only takes about 2 to 3 minutes for the investor to make his investment. Okay?
Interesting. So question, this is a relatively new thing. 15 years ago, it was put into play. What percentage of people are engaging with it versus kind of traditional approaches? Is it becoming more mainstream now, or is it just still an outlier, small percentage of people?
Yeah, it's a great question. I like to look at it. Some people say it's still in its infancy. This is the beautiful part and the great thing about it. It's in its infancy, but companies today are doing serial. Like I'm looking at a company this morning that we're having conversations with. This is their 5th raise. They started like doing a $5 million Reg-CF. They were successful. They started to build their community base. The community says, I like this company. I like the returns that I'm potentially getting. And then they did another raise and another raise. And this is their 5th raise. So from an adoption perspective, successful companies are now doing multiple raises and they're leveraging this. Depending on the sector that you're in, when we talk about things like marketing, I may be marketing my product or my services, but I can also dovetail onto exposing the fact that I'm raising capital, and you, my customer, can now be a participant. And that's a really compelling thing. So imagine, if you will, if you look at a public company, you look at an Apple and the rabid Apple fans. I'm an Apple guy for life. You've got those fans. They're also shareholders very often, or being a product company. So imagine, if you will, like your company, Chris, you're heavy in the tech. You've got a tech audience. You're going to say, I want to change the world. I've got this product. Well, that's one thing. They may be your customers, but now share with that same story about their ability to actually be a participant and a shareholder in your company. So that's kind of a 2 for thing. So the more and more companies from an adoption perspective, like let's say, for example, you're asking me, we'll do over 200 companies per year, and there's numbers of companies like us. So you're going to see today, latest figures, billions of dollars being raised every year, billions, through regulation crowdfunding using Reg-As, Reg-CFs, and Reg-Ds through general solicitation. And that didn't really exist en masse. So we're seeing about a 20-30% growth every year.
Is there any stats on how successful those investors are versus traditional? Because they're getting in early. When the company does go public, they've already engaged. They've already kind of built that ramp up with them. But is there any stats on how well they're doing? Anybody talking out there?
Yeah, so the conversation, because they're private company, stats are a little more challenging, right? Because I'm a private company and I can disclose to all my shareholders, and I do annual reporting, for example. But the other question that I guess you're referring to is, it's that liquidity event. Okay. So the nice thing about these exemptions is, one, I can remain a private company. Let's put it that way. But something that's now appearing is what's called secondary trading. Secondary trading lets my shareholders trade, and the company gets to control on a secondary trading platform, so that I can actually have a liquidity event to sell my shares in a private company before I even go public.
Okay.
So, not being evasive on your stats comment, because I'll give you a little bit of case studies here that I think might give some clarity. So we talked earlier about the education. So remember, I said you can raise the capital, but how do I get out? And that never really existed before for most private companies. It doesn't mean that you have a buyer on the other side, but I want a liquidity opportunity. And more investors are looking at, especially something called a Reg-A plus, where you can raise up to 75 million. Those shares are freely transferable immediately. What that means is, hey, I just spent $1,000. I bought shares in this company. Maybe I could transfer those shares to, say, a family member. Okay, immediately. Maybe I just needed to do a private transaction on the side with my family member. I need a little bit of cash here. The company's doing well. As the company's evolving, their valuation can also be going up. So companies, we had a company last year that did multiple raises. They were pre-revenue company. They were in the tech space. Their private share offerings went from $5 to $20. Okay. And then they rolled right into NASDAQ as a public company.
Okay. So that was a liquidity event. You said something I want to touch on before we get off this, the valuation. Pre-public companies, how does that valuation change? How do they get to the point where they can show that to these groups of investors?
Yeah, well, you're the one thing that's really important to know is when you're doing a private offering online, you're sharing the valuation of your company. It's full disclosure. You're saying, my company, I believe I'm worth $1 billion.
Is it just I believe, or something beyond that puts some proof behind it?
There's generally, you're going to do some comparables and there's some meat on the bone, so to speak. The challenging or the tricky part with a pre-revenue company, and this is how the VC community is going to look at it. They're going to look at a valuation and they're going to say, if I told you I've got intellectual property and I've got patents and I've got something there, or I've got a bit of a track record from my team, the VCs are going to look at it and say, you think you're worth here, we think you're worth down here. So there's right away, they want to push that number down, right? The nice thing, think about it this way. When I'm doing general solicitation to the public, I think I'm worth here. The reason you're getting pushed down there, because they're going to take a big piece and they could add value. There's no question, but they're going to take a big piece of your company. The public, remember, says, I couldn't even participate. I'm not risking my livelihood on this. I believe in what you're doing. So the valuations for a company is really predicated on, very often, on comparables. You're going to say, this is who we're at today. This is what we believe we're going to be there in the future. And that investment community that's going to participate, that's the risk that they take. I mean, I'm old enough to know I've got lots of share certificates in filing cabinet drawers over the years. I never really knew where the company ended up. They just kind of disappear. So there is risk. There's always risk. But at that point in time, no different. I invested in companies that I thought were going to be the next big thing, whatever sector, whatever category they were. We all have to realize that some of them are going to succeed, some of them are going to fail.
Yeah.
And that's the check.
Yeah, so we're getting close to the end of time, but I wanted to talk a little bit about, beyond that. When we hear Series A, Series B, Series C, explain that kind of part, kind of after these, and if we're migrated past crowdfunding or whatever, just so we can have some coordination with the terminology in the market.
Yeah, so from terminology, so think about, one is general solicitation, accredited, non-accredited investors. So when people, they often commingle the terms when they say, oh, I'm doing a seed round. The seed round is to say, my seed round might be a crowdfunding round. My seed round might be from a venture capitalist or an angel investor. My seed round could also be from a handful of accredited investors under a Reg-D offering that I couldn't do general solicitation to. So it gets a little bit nuanced. So if you really think of seed rounds and Series A and Bs and Cs, they're simply stages of your funding, okay, from a terminology perspective. And historically, those stages of your funding, again, came from venture capitalists and institutional investors when you get higher up. Now, think about it this way from a common sense perspective. If I've raised $5 million, I've added value to my company just because I've used the proceeds to kind of grow my company. It doesn't, if my deal is good, it doesn't stop a venture capitalist firm or any other, my Series B, to come in and say, we really like what you're doing. You've already raised capital. You've built your team up for an investment perspective. So that doesn't change. So typically, to your question, Series A, Bs, and Cs, they're simply rounds of financing, and they're often larger rounds of financing, depending on the nature of your business. So that's really what it's all
So
about.
there's not a range of a Series B is this, or at this time, Series C is this much, or at this time. It's just like going in order. You already did an A, so the next one you call a B, and that following
Yeah,
one you
for
call
the
a C.
most part, and it's generally the size of the raise as well. I
Yeah.
mean, there's a number of different variables, but in a simplistic term, there's simply rounds of financing, and they're rounds of financing where your valuation and the
Mm-hmm.
terms are different.
Okay.
So remember, I'll come back to, if I raised $5 million and I said my valuation was $5 million prior to that, once I actually have the 5 million, my valuation is exponentially higher because now I can operate my company. Now I've got out of the basement. I don't have a dream. I've got some employees. It doesn't mean I'm profitable. It simply means that I have the ability to execute on my business plan. And as I start to execute, if we take a look at public companies that for 10 years weren't profitable, some of the greatest companies that existing today were not profitable, and they just kept using different rounds and getting more and more capital in the company to execute on their plan. Amazon, case in point. Okay.
Yeah.
The post shot. So a lot of people would have said back in the day, well, wait a sec, they got $100 million and they lost $90 million, right?
Mm-hmm.
But that set the foundation for them to continue to grow
To what they
and
are today.
operate. But they continually to need capital. So your comment of different series and different rounds, those are evaluated by the different participants who are going to say, we are doing another round of financing at a certain valuation. That's
Interesting.
pretty much what it means.
All right. So kind of in closing here, anything, we haven't talked about behind you. You have a couple things in your background that are your platform and what you offer, but you do offerings for these crowdfundings. Give a little bit of explanation of that and what you have
Yeah, so
behind you
think
there.
of it, I keep talking about trusted intermediaries, trusted parties. So first and foremost, KoreConnect, we're a technology platform provider, okay? We bring together broker dealers, we're also a digital securities transfer agent. I won't get into the weeds of what that really means, but think about, I need banks, I need payment rails, I need broker dealers. KoreConnect is behind the scenes. So we're like from a tech perspective, we white label the ability for companies to raise capital utilizing trusted intermediaries being broker dealers, banks, and payment rail providers. So that's really what KoreConnect is about. There's a whole multiple layers of making all of this happen, but we just make it simple and we give visibility. This is really important. What didn't exist before, and I'll close out on, investors need visibility of what's going on with the company. So if I gave you $1,000, I want the ability to log back in, take a look at the status of my shares. And I'd also be really nice if that company had the ability to communicate with me on an ongoing basis. What's going on? Good news or bad news? People are people. People will go, if Chris was saying, hey, we're hitting our milestone, but things are a little bit slower. That's a better message than not hearing anything. I gave you $1,000, where'd they go? So that's where the democratization of capital and the visible aspect of the investors being able to see what's going on with the company they invested in, and making it easy for small companies or any size company for that matter, communicate with their shareholders the way a public company might today, but at a fraction. I mean, just cost effectively. So that's what we really do. Yeah, we're a technology platform. We bring together everything. In your wheelhouse, we're on a blockchain, but not in the same sense of a blockchain. We're a permission blockchain in a regulated world. So that's where KoreConnect is. We help educate. Then we show what we do. It's as simple as that.
Well, thanks for joining today. It's been great to get this education. I know it's been helpful to me on this ride, and I think many people have these same questions. So thanks for joining today, Peter.
It's a pleasure. I appreciate it, and have an excellent day to all your listeners.
Thank you. Bye.
We hope you have enjoyed this episode of New Cyber Frontier. Remember to get involved. Often we think that someone else will handle privacy and security in the virtual world, but you are the only one truly in command of your virtual fate. Join our mailing list so we can keep you informed of breaking news and new releases. If you have an idea, if you have a question that you would like to hear answered, Or if you want to get involved with our efforts, reach out to us at newcyberfrontier.com. We also encourage you to visit our sponsors' links, as they are the ones that really make this show possible. I want to thank each of you for supporting the show, and we look forward to seeing you back for the next episode of New Cyber Frontier.